Hey everybody, welcome to Stock Sniper Trading. Thanks everyone for joining. Good morning, good afternoon, good evening. Welcome guys. It's just after 11 a.m. Eastern. It's Tuesday, June 23. I hope you guys are all doing well, and we're going to have a nice little 2-hour session, and we'll wrap it up because Portugal is going to start playing very, very soon, just after 1 p.m. So we'll catch a few World Cup games today. And I hope your team is doing really well in the World Cup, and I hope you guys are enjoying the World Cup hosted here in US, Mexico, and Canada. Welcome, guys. So we're going to get into this. We're going to get right into it. We're going to go right into Forex Factory, look at today's news. We're going to go into the charts. We're going to do top-down analysis, and then we're going to bring it down to the lower time frame. So hope everyone's good, and let's get started. So Forex Factory, guys, you guys know that today is a lot of flash manufacturing, flash services, starting all the way from Europe. You can see at 3:15 a.m. Eastern, we had the French flash manufacturing, flash services come out. 3:30 we had the German. 4 a.m. we had the Eurozone. 4:30 we had the UK flash manufacturing, flash services, and as it moved into North American sessions, we had the US flash manufacturing, flash services at 9:45, right when Wall Street market opened. Could cause a little bit of volatility in there if you guys were trading. Our afternoon, do we have anything in our scheduled when we're trading? Not much going on today. And just if you're going to be trading the late Tokyo sessions, Australia, New Zealand session later this evening, just keep in mind at 9:30 p.m. Eastern, there's 3 high impact AUD folders regarding the Australian CPI and inflation. So if you are trading, that will affect the Australian dollar later this evening. Trump is always in the news, and today he's saying despite their despite false statements to the contrary, Iran has fully and completely agreed to the highest level nuclear inspections long into the future. He even said infinity and beyond. So I don't know if he's the new Toy Story movie is out, Toy Story 5. Maybe he watched it and he's talking about Woody and Buzz Lightyear here. But Donald Trump is in the news. Okay, so whenever he's in the news, whenever he's talking, we have to trade with proper risk management because the markets can get really volatile and they can whipsaw until there's concrete news that's solidified. Right now, we've been trading the last few months where the Strait of Hormuz is open 1 week, one day, and then it's closed again. Then it's open again. Then it's closed again. Then we have peace talks. Then we have bombing again, and it's just nonstop like that. So it's very difficult. It's a very difficult trading environment to navigate around this. But the only thing that we can do is limit our risk. Some of you guys are learning this the hard way, and some of you guys are actually doing better. And it's taking a long time, but finally understanding to lower your risk in volatile environments when you're trading, okay? It's just, you're gonna have to learn how to do this at some point or another, because a lot of you guys are still blowing up accounts and you're wondering and scratching your head why you're blowing up accounts, okay? It's because you're using your position sizing is too large, you're over leveraged, and you're trading a very volatile time, okay? So you need to learn how to lower your risk, okay? And once you do that, trading will become a little bit more efficient and more easier for you, okay? You're not going to have astronomical gains as if you're using big, huge lot sizing and you're over leveraged. It's going to take more time. It's going to take time, but trading takes time. It's a lifelong journey. I think some of you guys want to trade for more than a year, 5 years, 10 years down the road. So you got to understand it's a long haul journey. You don't need to become a millionaire overnight. As much as we want to make $1 million today and retire. That's the goal, but most of those people that trade like that lose all their money, okay? Traders that go slow and steady, they're the ones that win the long race, okay? So right now, NASDAQ is in the news. NASDAQ plummets as tech sell-off gains steam. So the faith in the AI trade continues to fade thanks to a rout in top memory chip makers, even amid upbeat signs for the Iran peace deal. So NASDAQ is down 1.67%, almost 400 50 points right now, okay? So it's taking a hit right now. A lot of that has to do with SpaceX, took a big hit. Guys, I was reading articles. There was some people that put their life savings, and it's a sad story. They put their life savings. There was kids that put their entire university education tuition on SpaceX and believing it's going to go to the moon, and in fact, it dumped. So that's what I was saying, guys. You have to understand how IPOs work. They use retail traders as exit liquidity. And now you're going to be stuck holding the bag. And sometimes it takes years before these companies ever do come back and trade where they were at those highs. Maybe SpaceX is a different story, but if you look at the history of IPOs, if you buy the highs, you're going to be stuck holding the bag for a minimum of 1, 2, 3, 4 years. And it's a sad thing that I'm reading about retail traders buying in on the FOMO, on the hype, putting their life savings in on call options for SpaceX, and now the nice pullback has came back to where before it even started at 150 bucks a share and could dip further. So that's what I mean, guys. If you wait patiently, you have to wait 1 week or 2 weeks, but look at the dip buy you could be getting now. And if you were that person that bought at those highs, you got to now learn from this. You have to learn. This is why journaling and understanding when you buy the highs, this can in fact happen. This is not just for SpaceX. This can be for if you're buying the all-time high of Dow Jones, if you're buying the all-time high of S&P 500, all-time high of NASDAQ, all-time high of oil, all-time high of Apple, all-time high of NVIDIA, all-time highs. You got to understand that you could be exit liquidity, okay? Do we understand that, guys? Or maybe I'm the only one that understands that. I hope you guys get this, okay? And that's why patience and discipline is the most important trait of a trader, is waiting. It's a game of waiting. Think about now. You know how excited we were when SpaceX came out and you bought those $225 where it was trading. Now look at the price tag of it. It's taken a big hit and could go down further. Put yourself in the shoes of those early investors. They're millionaires, right? Think about you. If you bought SpaceX early and you are a millionaire, you would be looking to exit your position and realize your millions of dollars, right? You would do the same thing. I would do the same thing. So the individuals, the early investors, the founders, the janitor of SpaceX, the employees are millionaires. They're looking to exit their positions, and who do they sell it to? They sell it to you and I, and then we're stuck holding it for months or years to come, okay? If it ever does recover. So that's what we need to learn as traders, guys. I hope it's hitting home. I hope we're learning that, okay? That's why sometimes when you're trading at the FOMO, you should always ask yourself, should I wait? Maybe the trade will continue to go, okay, it's okay. But think about the consequences if you're buying at the all-time highs of securities or at the highest points of the days and things like that, okay? More news in the markets. Micron to post Q3 earnings amid sky-high data center demand. Micron is down, look, 10%. Tech is taking a massive hit. Bitcoin is down. NVIDIA is down almost 4%. Oracle is down 3%. So you can see tech is taking a heavy hit today. Tesla is down 5%. So those big names that we're used to are having a big red day, okay? So let's continue going into this. In our Discord, guys, there was a couple of signals sent out. Long XAUUSD gold at 41.20 hit almost 200 pips. Okay, so it closed above. There was a little bit of dip in drawdown. We have a standard stop loss down here, and it came back up, back to that static level of 41.20. Closed above. There's a little Tetris piece inside BART, and then it continued to break out and take out this high and make a new higher high. So if you got that, congratulations, guys. With indices as well, there was a good breakout at 550 level for Dow Jones that hit some highs, okay? If you need trade ideas, trade signals, we do provide these to the group. They're in the premium group, and you have access to those as well. Guys, also everyone on YouTube, thanks for joining. Guys, we have a new OBS layout, something new and fancy, and some nice new videos, countdowns, and to get started. So I hope you guys do enjoy it. I hope you guys do like it. And there's a free Telegram channel pinned at the top of your YouTube. It gives you all of the upcoming links recaps of Dave trading with the snipers in the early New York sessions, doing their thing. And here's the giveaway, guys. There's a giveaway on Telegram. You have to enroll or sign up right here or click on this link for our Stock Sniper Trading free Telegram and also the AI Trade Ideas free Telegram. If you click on both of those, we're going to give away 1 month of the AI Trade Ideas and a premium plan SST this Friday. So, but you have to be enrolled in both of those. Okay, guys? So the links are right there to click on. And again, shout out to all the dads out there. Happy Father's Day. I hope you guys had a great weekend. And I hope you guys got spoiled this weekend, okay? And if you want to join the SST team, we'd love to have you guys visit our website, stocksnipertrading.com, and you can unlock the premium plans, 3-month, yearly, or lifetime, and you get 50% off code. Use this code SSTJune50, okay? We also have free blogs available to all of you guys. If you go to more, click on the blog section. We've got blogs on how to prepare for FOMC week, testimonies with Vinay's success, SpaceX IPO, everything we need to know. This was detailed precisely about who's in the money here and how to trade an IPO. This whole thing talked about patience and discipline and possibly wait for pullbacks like you're seeing today. How to trade CPI week, we had that last couple weeks, and what to do on bank holidays we saw last Friday, okay? And guys, again, thank you to everyone on YouTube. We appreciate all of you guys. Please hit the like button on our streams. We do appreciate it. Subscribe if you're not subscribed already. You are part of this with us. Let's see if we can take this up to 103,000 in the next little bit, okay? And I'm going to get into it now. I'm talking very fast. I've had 2 coffees already. I had to get up very, very early and go drive my son to school and then pick him up after his exam. And I did a little trading in Wall Street and I'm ready to go again, okay? So hopefully everyone is having a great day. Let's get started. Top down on gold, XAUUSD, starting from the daily, going down to the hourly. Finally, we'll bring it back down to these 5 minutes, okay? And welcome everyone on Zoom. Thank you guys. Sergio, welcome. Vinay, good morning. Tulumi, thank you for joining. Tony Gold, thank you for joining. Sean, I caught a beauty NAS sell. Price action came at 29,800, gave me clues. Perfect. It's like playing a video game. Be patient, disciplined, wait for the market to give you your clues. If you're speculating, Sean, take a small feeler trade. If you get stopped out, it's not a big deal. It's not the end of the world. You learn from it. You move on. Take a minimal loss. But if the feeler trade, speculating trade is giving you the conviction that you need, then you can go ahead and trade with your normal sizing. So congrats, guys. Patience, discipline pays off, and looking for those clues in the markets, okay? I know some of us, we get excited and we trade and we get stopped out of the markets, but if you're using the proper risk management, everything will be okay, okay? Sherry, you knew it was going back down. I know. It's just a matter of time, Sherry. Would it be the next day? Would it be a week, 2 weeks, 1 month? You know, but eventually it will come down to earth. You know, SpaceX will come down to earth. I know it's trading at these historic moon like numbers, but it will come back down to reality, and we're seeing that just now. Okay, and Sean, you spoiled your by your stepdaughters. Nice, that's amazing. You deserve it. Mike, good morning. Thank you. I hope you're doing well. And everyone on YouTube, thank you guys. I appreciate you guys. Welcome. Todd Skin, good morning. Zensi, welcome. Thank you for joining. Arthur, thank you for joining. Good morning. And Constanta, thank you for joining. We appreciate you guys. Okay, let's get started, guys. Daily. Let's go over gold. Okay. We're on this downtrend on gold. Okay, so you guys know, just really quickly, there's the all-time high 5,600. We're making lower highs off of it, lower high, lower high, lower high, lower high, lower high, lower high, and maybe a new lower low in the next a couple days in here, maybe this week. Okay, some key points of interest right over here. Here's a key point of interest. Yellow line. You guys probably see I'm identifying the same points of interest on a daily basis on our calls. Why? Because they're static levels, and I just continue to identify them and stretch them in the future. You're more than welcome to add an alert there. like so, add an alert. If it gets up there, you're ready for it, okay? We're nowhere near that, but there's got to be other points of interest that we can recognize, okay? Another point of interest right here, this was a point of interest of support where it held. There is a zone right below it. If you look over here, this was a previous all-time high of gold back in October of 2025, and now it's being created as a demand zone right over here, which volume closed above, retested it, and that took us to the all-time high. And since then, there was a big liquidity grab or a stop hunt, whatever you want to call it, sweep the lows. That was a Black Monday, but then Donald Trump saved the market by tweeting at 7:03, the Strait of Hormuz is open. We have an agreement, and then gold rebounded and bounced back up. And then you can see there's the red wall above us. So if we extend this zone into the future, you can see now we had the Friday candle on that was NFP Friday, and you can see it was bearish and closed below. So the same zone, same size, I'm now making it red. I'm extending it into the future. So you can see we pushed down. There's our point of interest where we push down to the bodies right there. And then you can see that there's a little wick. If you want to develop a little green zone from the yellow line to the wick, just to show you where there's some daily support right there, you can do like how I'm doing and stretch it into the future, okay? Stretch this red zone into the future, then you can now see Monday, June 15, we came in there, rejected back down. Tuesday, inside bar, rejected back down. Then Wednesday, they pushed it down. Thursday, there was the retest, pushed down. There was Friday, and then here's the Monday open, and then we're continuing to make lower lows on the daily, okay? So stretch these zones now into the future. Now you see where we're trading and consolidating on the daily of gold. Are we going to come back down here for a double bottom soon in this green box? Or is it going to do a liquidity grab like over here? Or is it actually going to close with a black candle below? Okay. These are the options, right? You guys know trading is options. You can even do options trading. So I'm giving you guys the options of what could happen down here. Here it comes down. There's the one bounce. See where it came back up? There's our neckline. That's our red block. It cannot break there. Now our sellers are in control, bringing it right back down. So are we going to come back down to the green box? And it's going to be a double bottom, and we're coming back up to test the neckline, and you guys should know the options. What could happen up there? It could break and be an impulse and get rejected with a wick coming down and close below and then drop again. It could break on an impulse and close above. Then we're looking to flip the red zone green and retest it and drive back up. So there's multiple options that can happen up there, but we're not there yet. We need to worry about these options down here. So it could just bounce like so and come back up, or it could break very, very similar to this candle, where it breaks, sweeps the low, grabs the liquidity, all of the terms that you guys know, sweep the low, catch a wick, come back, close above, retest this, and go up like that. Just like this exact pattern recognition over here. Very similar. Trading is all about recognizing patterns, right? So I'm giving you the patterns that you should recognize. And then the third and final pattern to recognize is if it comes down here and closes black. It's not a wick like this. It's not a wick. Like this day, if it was a black candle that closed below, if it closed below, what I would be doing is changing that green box to red. And then when it comes in, it could be the offers to continue to push the market down, okay? So you guys understand that when we trade, there's a few options that can take place. But you also got to look for those clues. Those clues, like Sean figured out a clue and he made some money. You got it. I said, like, trading is like a video game. You got to look for those clues. Those clues are there every single day. But the more patient you are, you can see how the clues develop. If you're trading every single candle on impulse, then you're going to make some mistakes. And I understand. I'm an impulse trader too. I'm a scalper on the 1 minutes. I know how it is. Okay. But in my opinion, the best thing to do is wait for a particular body on your time frame to actually close, and you'll have more success that way. Okay, so let's just follow yesterday's volume and how it's moving into today. Okay, so we saw on Friday came down and we closed. Okay, so let's figure out some points of interest intraday over here. So we closed right there on Friday. That's where we opened on Monday. Okay, we remember we had a weekend and it opened. And then it was initially bearish yesterday, but see, the sellers did not take out Friday's low. It came up with a higher low, came back to the opening position, and the buyers were strong. They flipped the candle blue, where it was blue, blue, blue. Look, it was even engulfing Friday's volume and broke for a new high. So it came up yesterday and got rejected and then came back down, and look at where we closed. So we closed inside. We didn't engulf that the sellers. So the sellers are still technically in control. That wick is still a lower high from this body close, from the body open and that wick. And then now our transition from when we opened, now it was initially bullish today. So look at how briefly bullish it was. It was blue, blue, blue. Did the buyers do their job today? No, they did not drive up yesterday's wick. Remember, buyers and sellers have a job to do, just like you and I. Just like you got to go to work every day, you got to clock in and clock out. A candle has to clock in and clock out. Every candle has a job to do. Its job to do is, if it's bullish, it has to continue to fill the previous wick and create a new high. Then the candle has done its job. Same with sellers. Their job is to continue to push down and break for a new low. And then the sellers have done their job. Then we follow the volume into the close. Okay, so you guys understand what I'm saying? It opened, it came up, there's our high of the day, just below 4,200, a psychological number, came back down. Here's a little Tetris piece with an inside bar, and now the sellers are in control. How do I know this? Look, they came down, they back to the open of yesterday, and did they do their job? Yes, they filled yesterday's wick. So we can identify yesterday's wick. It's fresh in the market. It was a low, and now it is acting as resistance. So the price is at 4127 right now. That yellow line is, let's say, 4137. That's $10 away, 100 pips away. So if the buyers come back up to this yellow line, that could be resistance to continue black volume pushing down. Okay. If we close above this yellow line on an hourly, on a 30-minute, on a 15-minute, on a 5-minute, we could build support off of this to continue to backfill this wick and get up to the next point of interest. Okay, and now let's continue. It pushed down. Not only did it fill yesterday's low, but it also broke Friday's low. So we've got a new weekly low where it pushed all the way down, and there's our daily low right there. So that's where I'm placing a purple line right there. Okay, so we can see today's low broke 4,100, that psychological level. We got down to 4,190. Guys, it's like I see this often. Maybe you guys see this too. Whenever you break a psychological number, let's say 4,000, and it's going down, it always wants to, it's like a magnet. It wants to come down $10 below to 3,090. If it's 4,100 and is breaking, it'll go to maybe 4,110. You can see here we broke 4,100 and it came exactly to 4,090. So just keep that in mind when you're trading. Maybe I see it all the time. Maybe you're going to start to see it, and then you'll know. If you're breaking a psychological number, give it about $5-10, and you'll know where it could find some support. Okay, so today's low is in fact higher than this big bullish candle on June 11, and we're still above this green zone. So technically, it is a higher low. Okay, but we really need to push up on this black volume and consolidate back in here in order to continue to come up with a leg coming back up, because sellers could easily come back down, fill the wick, come down to low, and then come into the green zone. Okay, now see, I have yellow lines all over the chart, but when I go to the lower time frames, they're not going to be so clumped together because we're going to be zooming in on a particular price. Okay, so now we found the bottom, it's coming back up. Okay, so it is bearish. We have a downtrend coming down, and today's candle daily high time bias is bearish. Okay, but will we find a little bit of a bottom to push back up? And if we're taking buys, we're counter trading. Okay, so you got to have counter trading rules when you're trading as well. Okay, so now I'm going to go down into the 1 hour. Let's see, where did all this buying volume come in? Where did the selling volume come in? Right here. Here's the big candle, Monday at 2100. That's 9 p.m., just right after the futures market. There's 10 p.m., 11. There's midnight my time. Here's 1 a.m., 2 a.m. Here's London, 3 a.m. Here's where we hit the lowest point of the day was 4 a.m., and then we came back up at 5 a.m. Here's pre-New York, 6 a.m., 7 a.m. consolidation. Here's COMEX, 8 a.m. And then here's Wall Street with the big blue candle. And you can see we're in a little bit of an hourly uptrend coming. Like if I go from wick to wick, let's go wick to wick. Okay. And if I make it white to show us, we have a little bit of an hourly trend coming up, but we have the big trend coming down, right? You can see the waves coming down easily. You can see that wave coming down. It came back up lower high. Big wave come down, came back up. You can look here, here, and here. All looks like a lower high. Then we have the next wave pushing down. And now we got this wave coming back up. So is it going to find the resistance right there or right there? And is it going to continue to push down, right? Unless we're building a second bottom, unless we're closing with some volume above here on the hourly, maybe it could continue to push back up to here. To this yellow line, okay? So now what's going on our hourly? Let's take a look. Let's zoom in on our hour. This is our big hourly volume we've had at 9 a.m. It came up. It got a high up here. It just barely missed our daily point of interest of closing above. It just closed right below it. Then we see we had an impulse at 10 a.m. where it did push up blue, blue, blue. But then you see where it got rejected? Right at the opening body of this 1 hour. That's why, guys, I always say, opening and closing prices are really important. Look at that. The midnight bar, that big black bar at midnight, look how it came right back up right at it. Okay. And then those sellers at midnight were there protecting the position, and then they pushed it right back down where it came down into trade into. About 50% of the blue candle came up and closed. So now, if you really want to consolidate the hourly volume, we are trading in between these two daily points of interest right here. It's a flag, right? You can neutralize it. You can make it like this, and you can see how the volume is trading. So is it going to trade in this flag all day, maybe to end tomorrow? The answer is no. It will eventually, whoever accumulates more, the buyers or the sellers. So we could see buyers accumulate more, maybe in fact close it above here, maybe retest this, and then take it up to that next yellow daily point of interest, or sellers are accumulating as well, and the trend is going down. All the sellers got to do is kind of physically get it to close below the daily yellow line, and then maybe break the trend, retest, and then they got some movement to come back down. Right there is like an hourly support right there, holding right above the lowest point of the day. You see where they're protecting it? So like what I like to do on the 1 hour is draw a little green zone like so right there to tell me where the hourly support is. And you can see when I go down to the 5 minutes, you'll understand what that green box is, okay? There's the first bounce. That could be the double bottom right at the lowest point of day, or a liquidity grab, and your options, right? It could be a break, it could be a close, it could be a fake out, it could be a liquidity grab, it could be any of the above, okay? But we're not there yet, so what I'll do is I'll place an alert at that white line, and that's right at 4,100. So if gold ever comes back to 4,100, that could be a nice high probable setup down there, okay? So we're pushing back up. This hourly candle is going to close in 27 minutes. So it's if we're trading this right now, this hourly bar, we're trading on impulse. So what I like to do is maybe go into the lower time frames. We can go into the 15s, see how the 15s are coming up. They came back down, they're consolidating. Maybe they're got one more leg coming back up. And then if we go more into the 5 minutes, we can see what the 5s are doing. So the 5s broke out of here. They couldn't get above there, like blue, black, blue, came back in, retested, back down, holding, coming slowly back up, right up there. There's the staircases going up, and then that big elevator coming down. And again, it's building its way back up, okay? So we could maybe see some potential on the 5 minutes to maybe close above here and then break out of here. And then we got to watch this daily point of interest for 4,160 above us. But this is where we're trading at right now at this particular time in the market. It's 11:34 a.m. Eastern, and this is the volume. If we're going to trade, this is what we got to trade with, okay? There's no excuses. I don't make excuses for the time of the day. Oh, this volume is this. This is what the market is giving us. It's our choice whether to trade this or not. The market is not forcing me. There's nobody here behind me forcing me to trade this. I can, if I don't like this, I can walk away and choose to trade another time. I can choose to trade later in the day, in the afternoon. I can choose to trade Tokyo. I can come get up really early for London. I can do a pre-New York. I can do a New York. Like, guys, no one is forcing us to trade this volume, right? So this is where you got to be patient and disciplined and look for good potential setups, okay? And if you want to add some indicators on the chart, right, we can. So we'll add a 9 EMA. We're just above it. This thicker green line is the 9 EMA. The 200 EMA is right here. So you see where the 200 EMA is? So now I can see those 5 minutes kind of briefly broke above the 200 EMA and got rejected at the hourly resistance. And now the 200 EMA is lined up with our daily point of interest, okay? And I hate when the 200 and the 9 EMA are like right parallel with each other, because then it could get choppy, right? And then there could be whipsaw action, there could be fake outs and things like that. So we gotta have some caution right here. Okay, so if I was just to draw like a red and a green zone on the 5 minutes, this is how I would do it. See up here at the hourly, and then down to those bodies, I can make a little red zone, and this is for the 5 minutes, okay? Just to show us visually that that's where we're having a difficult time breaking above, right? And can we do the same for a supporting area right here? Right at that daily point of interest on the bottom, you can see how the 5 minutes are, 5 minute volume is not breaking there, okay? So this is like when I'm doing zones on the 5 minutes, okay? So we could continue to come up, go down. It tried to come back up, got rejected, built a little small double bottom right there, coming back up. And so traditionally we should see it break out of here, maybe an impulse, but something's got to come up here, maybe close here to do that impulse to break out, okay? Otherwise it could just get rejected and then come right back down. And then we watch down here. Will it close below and then drop down to the lowest point of the day, okay? And this is the volume we have to trade with, okay? So we're just gonna add the daily indicator bar. I believe we're using it on the hourly. So this is our hourly, okay? This is how the 5 minute candles are trading. This is our hourly candle. If you're to flip and check the 1 hour, it will look exactly like this. So I can see my hourly, there's the open, 41.30. It briefly came down, made a low right there at 41.23. It came back up to the opening position, then it flipped bullish right up there. There's the high at 41.36, and then it's getting rejected. So this is our hourly candle, which is going to close in 23 minutes. So this is just showing us how it's trading right now. And right now it looks technically bullish, okay? Do you guys have any questions about that analysis? And if you're buying, remember, we're counter trading because the overall trend is bearish, right? It's coming all the way down, came back up, it went down, but there's a higher low. It didn't make any new lower lows. And then there's a new higher high, okay? And then it's holding this. So definitely we could maybe test and break out a little further, okay? But when it comes up to here, you have to understand that this is where it could get rejected and potentially come right back down, right? Okay, so it's building now. It's building, building, building. Do we have a blue bar closing above this yellow line? Not yet. It does look like a big double bottom. Like if you just clump everything together, there's one bottom, there's the neckline. Consider all this like a second bottom. So this is what it looks like, a W. So traditionally, a W likes to break the resistance, right? But it's getting rejected and rejected right now. Okay, guys, leave us a like on YouTube if you understood the analysis. Subscribe to the channel. We do appreciate it. I'll do US30 as well in just a moment. But let's watch gold here because it's at a pretty interesting level right here. This 41.36. Country, good morning. Welcome. Thank you for joining. How's everyone's day going? And yesterday, someone messaged me on Discord privately and said, "Ron, I saw you took a couple losses on yesterday's call. How do you come back from that? Like, how do you come back?" And I'm going to give you guys an honest, straightforward answer. Okay, I'm not bullshitting you guys. I'm going to give you an honest answer. And you're going to take some losses when you guys trade. Everybody does, okay? But it's how you come back from it. So as a trader, listen to what I'm saying. Pay attention. As a trader, you got to have a short-term memory, okay? What I mean by that is if you take losses, please analyze them as soon as possible and understand what happened. I understand what happened with my trades yesterday. And I went and right after the call, I dissected it, I figured out what I did wrong, and I learned from it. And then I have a short term memory where it's out of my system now. I analyzed it, I learned from it, and now it's time to move on. I see a lot of traders, they dwell upon their losses for multiple days and weeks and months, and that will destroy you as a trader. It will cause you to not have the confidence to take any trades. You'll be scared to take a trade. You'll be hesitant. You won't know when it's good trading volume or if it's tough to trade that volume. But have a short-term memory. Go in, analyze it, learn from it, whether they're winning trades, losing trades, or you have a shitty day in the markets, learn from it and move on. Move on. You got to be able to move on to the next day, and then next day is a new trading day. There's going to be new candles opening and it's a brand new day. But if you keep thinking about the mistakes you made and it's bothering you, it's going to bother you for multiple days, and then it's going to really affect the way how you trade the next day or next week, okay? And then you're going to be stuck wondering while other traders learn fast and move on, even from their mistakes. Even if you blow up an account, even I know that there's going to be some traders on here that blow up accounts, but you need to go and figure it out why you're blowing up accounts fast and come back stronger the next day with a clear mindset. Losses aren't easy to take. Well, that's the difference between me and you, Frozy, because I can take losses. And I know when you can take losses, you're a mature trader. I'm trading well within my risk. Okay, I'm going to repeat this again. If I'm trading today, I'm trading with, I understand this, guys. You can do the same thing that I'm doing. I'm trading with 1% of my entire capital. Okay, whether I was trading a prop firm, my money, or your money, it doesn't matter. I'm trading with 1%. Am I applying that 1% all on one trade? My answer to you is no, I'm not. I take about 4 to 5 trades a day, okay? Sometimes more when I'm scalping the 1 minutes by myself. But I look for 3, 4, 5 quality trades a day. Sometimes I feel forced and I rush trades with you guys. But if I'm setting alerts and I'm waiting for the volume to come to me, I can look for 3, 4, 5 quality setups in a 24-hour cycle, okay? And from that 1%, you simply divide it. Do some grade 3 math. If you're taking 4 trades, you take the 1%, you divide it by 4, and it's telling you exactly how much allocation you should put on each trade, 0.25%. And if I lose my first trade 0.25%, I'm learning from it and I'm adapting and I'm moving on. It's no need to panic. It's no need to blow up accounts. So I can take losses and I take them by learning. See, when you say it's not as easy as that, that was my mindset I had early on when I'm telling you guys, it is that easy. You can have that mindset and you need to learn that mindset. So don't make excuses for yourself. Frozy, I love you, but don't make excuses for yourself, okay? You need to learn this mindset. If you want to become a better trader, that's up to you. It's not up to me. I went through all this shit myself. I said it's not easy to take losses. It's not easy to learn from losses. And then I figured out that's part of the game. You have to. There's no excuses. There's no ifs, ands, or buts. You just got to do the work. And that's up to you. If you want to listen to some advice I'm saying or not, that's up to you. Okay, so we are breaking out back up to the hourly area here, okay? This could be more of the true neckline where it failed here, and failed and came back down. So we're trading in this zone right now, right over here. And we're going into noon in the next 15 minutes. How to learn from losses. Like, listen to what you're saying, Kareem. How to learn from your losses right now. If I take a loss, go and learn from it. Okay. Let's say, for example, you sold. Okay. I'm not doing this, but let's say, let's learn hypothetically. See this, how it came up and then it got rejected. And let's say when it got rejected, you sold, right? And now your stop loss is in here, okay? You sold. You were looking for it to come down here. Now you're in drawdown. Let's say, for example, it comes back up and it stops you out of here. Now, this is what you got to do. How to learn from a loss. You go and ask yourself and look, review the trade. Say, okay, so you went in on a sell just because it hit this daily point of interest and got rejected. You have no confirmation of how the candle closed. You just went in on the wick. Now you see it closed and look at the candle opened, ignited. Had you waited for that candle to close, you saw it's ignited and it's doing its job. It's a blue candle doing its job, continue to fill the wick, and then it closed above the 200 EMA and the daily point of interest. And you were in a sell there, so you should not have been in a sell. Maybe you should have been waiting for a buy was the better trade, okay? And then you take a loss, and now you learn from it. And now you know for next time, maybe don't enter a trade on just a wick. You wait for the body to close. Write that down in your journal. Write it down. And that's how you learn, right? How else do you want me to explain it to you guys? What do you want me to tell you? That's exactly. See here. What happens here? Here's another lesson. What happens if you bought the FOMO breakout right there, right? It came up blue, blue, blue into the red zone. We see 4 candles that got rejected and you just bought that. And this is your stop loss now, okay? You're looking for it to break now. Now it's coming down. Let's say, for example, this black candle comes down and hypothetically stops you out. How do we learn from that? Okay, you take a loss, should be managed. Let's say it was a 0.25% I took on this. Okay, it's 0.25% loss. It hurts. It stings. I lost money. I understand how it is. It's never a good feeling losing money, whether it's a little money or a lot of money. Let's get that straight up. Doesn't matter if you're losing $1, $10, $100, $1,000, or $1 million. A loss hurts, okay? We know how it is. But now you got to learn from it. So go back and ask yourself, why did you were buying on FOMO, you were buying on impulse, and if you waited, you saw it close and then come back down, okay? That's how you learn. And write down, jot these down in your journal. So then you know. Then lesson of the day is maybe wait for bodies to close, right? And then if you wait for bodies to close, you'll get a better confirmation. I'm not saying if you wait for bodies close, you're going to become a profitable trader and that's it. You're going to become a millionaire. No, but at least you can see what's going on. You're being more patient. That's it. Guys, I'm trying to help. If you guys don't want to take what I'm saying, I don't know how else to help you. But for some traders, they're listening to what I'm saying and it's hitting home. For others that want to just play games and just, I know some of you guys just like to do this to me, get me going, but at the end of the day, it's your money. I'm trying to help you save your money. I'm not trying to be an asshole. I'm not trying to be ignorant. I'm not trying to make fun of you. I'm trying to help you guys. Okay? I went through this. So don't think that I didn't go through this. I'm talking from experience when I talk about this. Believe me, every trader has. Ask anyone in our group in Zoom. That's how you learn. How do you learn in life? I made mistakes when I was younger, right? I was a dumb kid growing up. I made some mistakes. And as I got older, mature, experience, I learned from it. I know now, being 45 years old almost, I can't do the same things I was doing when I was 16 years old. It's just stupidity. I've learned from that. Okay, so now, are we surprised that it got rejected here? Now it's coming right back down. So this black candle could potentially come back and close below that daily point of interest, and then maybe we'll have another leg pushing down. But and if you're trading this, we're still in this consolidated zone. Yeah, it might be a little black move come down here, but this is like a scalping zone. This is why I'm having difficulty on these calls. Like sometimes I'll get in a trade and it drops 50, 60 pips, right? Normally I pip and dip, but on these calls, I'm waiting for it to come down 100 and break there and get 200, and we have an amazing trade. But it takes a lot of effort to break all of this structure to get down there. So that's why I'm having difficulty on these calls, because I'm trading this zone. I can be scalping it, but I'm looking for bigger moves, and that's what's causing me to struggle on these YouTube calls with you guys, because I'm not trading like I normally do. So now I've learned from yesterday that I'm going to sit and wait, just like other streamers. I think I'm too aggressive on these calls with you guys, and we're not on the same page together. So what I'm going to do is I'm going to wait, just like other streamers. I see someone sent me a couple channels, said, Ron, this is how these guys do it. They'll sit on calls for 3-4 hours and they don't even take a trade. So I'm going to do the same shit. Hopefully we'll find something, but we're not on the same page as when I'm scalping and you guys are not on the same page as me. Sometimes we get in a trade 50, 60, 70 pips, and I'm holding for a bigger duration, but it could just be a pip and dip. But I don't know how to relay that to you guys, so that's what I'm having difficulty with. So I'm gonna wait for better volume to trade, better setups. This is not a A+ setup zone in here. We need to maybe wait for a hunt. Okay, like for example, what if they came through there, spike that, and then it comes back down? That could be a nice setup, right, to sell. Same thing opposite for a buy. It could come down here, break, you know, gather all that liquidity, come back up, and then take off. That could be a good setup to buy. To trade all this shit inside here, you're looking for small moves, right? Okay, now what happened? Let's analyze, right? Part of trading is analyzing. I know for some of you guys on YouTube, you do not like analyzing. You guys just like buying and selling blindly. But that's not going to happen with me. I'm getting too old on these calls to deal with that shit. This candle came up right up to that red zone, right up to these bodies. There's a body there, a body there, a body there, and a body there. And what were the results? It rejected off of there. The buyers on this candle came back up. Did they do their job and fill that wick? No. Came back down and closed below our daily yellow line. Okay, so now the sellers on this candle, did they do their job and fill that wick? The answer is no. It's got a higher low and now it's coming back up. Okay, so we're barcoding right at this yellow daily point of interest. This could be where we're flagging to go into noon, and either buyers will step in to break out this hourly resistance and continue to go up on gold, or hourly sellers will come in and start offering to push this down, come back down in the next hour. And you can see our hourly candle, the shape of it right now. There's our high, our low, and our volume is right back above the hourly yellow line. So we got to maybe wait another 8 more minutes, 7, 8 minutes for this hourly candle to close. Are any of you guys in a trade right now? I am not. What are your guys' bias? What do you guys think gold is going to do? You're selling oil? We're not even talking about oil. Okay, I'm asking you, are you on gold? Okay, I didn't ask for oil, but great that you're trading oil. But we're trying to stay on topic here. Nobody is in any trade right now on gold? Boom, nothing yet? Okay, what's your analysis? Let's hear something. Moed, FX. I feel like it's going to push up to the sell zone and 50-50 chance of it coming back down to 4100 level. Okay. Bearish. You guys are in sells. Okay. Sells are the overall trend, right? When we're looking at higher time frame, gold's been selling off, but also you got to understand it's building a little bit off the lowest point of the day. It came up, sellers could have brought it down to break for a new low, higher low right there at 915, came back up, new higher high right there. Then it kind of bounced right here 1, 2, 3 times and coming back up. So yes, buyers on the short term could definitely break it out of here and drive it up to here. But if you are buying, you're still counter trading the overall higher time frame. Like the daily candle is bearish, 4 hour is bearish, but you see how it's building a little bit in here. So it's hard to say. This is where we're speculating. We're speculating both with buyers and sellers. Siobhan, I think it would come down and bounce again. Potentially, yeah. That's why a nice little liquidity grab, maybe at the trend line. They take that out. yeah, then we see it launch and take off. And we're going into noon now in the next 5 minutes. Okay. And then again, guys, we're going to have an hourly candle open. Hourly candles bring in new volume, bring in new momentum, bring in new volatility, and things can change. Okay. I always hate being in trade, taking a trade right before a new hourly, because sometimes the market will fake you out. Okay. And you got to know that as a trader, you need to understand that. The market's job is to fake you out of your trade, right? Did you guys see yesterday where I got into that second buy? I got stopped out at that liquidity hunt, and then right after there, it bounced right back up. But guys, you remember, I don't know if you guys remember, I do, I remember these things because I do these things, that the high probable zone that we figured out, that box on the bigger candle that never got transacted. Did you see later in the day, did anyone have an alert in that box? I did. It came right in there and it bounced right out of there and it skyrocketed out of there. Shavon, you did? See, Shavon, that's what we need to teach our brain, is to set up for those trades and wait. See how long you had to wait? You had to wait maybe multiple hours, but when it finally came in there, it gave a high probable setup with minimal to zero drawdown and big profit coming out of there, big pips. Like, I know as much as I want to trade this area right here, it's exciting. We have 500 viewers on YouTube, but I know that there's way better trading throughout the day in better zones. And that's what I'm trying to relay here, guys. I know it's exciting. All of us want to get in a trade right now. But for you after the call, when we end this call, you got to know for yourself that, like, mark up your top-down analysis and wait patiently. Like if we're looking to buy, right? If you're looking to buy here, you understand you might be buying the high of a downtrend and then they push it down. So look here, like imagine, see these buyers that bought at the lowest point of the day, it's got a higher low off of it, higher low off of it. What if gold potentially just dropped, broke that, and came into here, right? So have an alert in here, because this is what started the entire run for the buyers right now. This leg that we're seeing, this higher high, higher low, higher high, and this higher low that's building right now. It all started right here at just after 4 a.m. Eastern. So if the market was to come down in here, those buyers that started at 4 a.m. Eastern, right now it's at noon. So that's how many hours? That's 8 hours later, right? And we're not even down there. But if it comes down there, that could be the big bounce that come back up. And then if you add like what happened yesterday to me, where I had my stop loss just below there, and then they hunt the liquidity, and then come back up, there's your high probable A+ setup. I would take that buy all day, every day, and I would trade it even with a larger lot sizing. I wouldn't be speculating at that time. That's conviction. That's when you know you got to go in. You know what's happening. It's coming back down to the original buyers, and then they swept the liquidity. They took them out of their position, and then they market got better entries and bringing it back up and confirmed close above the zone and then take off. So you know it's coming to a nice buying zone. They swept the liquidity and closed it above. Then it's go time. You got to understand that. That's your A+ setup, Monday to Friday, all day, every day. Okay. When I see that setup, I'm going to take that setup. Okay. You got to have your A+ setups no matter what. You got to have it in your head, in your playbook. Like this, are we getting a high? Is this a high probable trading zone? No, it's not. Like this will confuse us. This will frustrate us. This will cause us to go crazy. This will cause us to over leverage. This will cause us to break keyboards. This will cause us to hedge trade. This is this shit. Okay. I'm telling you, in order to get paid in trading, and it's this simple, guys, look, grab a line. I already have an alert at that white line, but this is how I would do it. Right in here. Look at what I'm doing, guys. Pay attention to this. See this red line I'm putting in here? Anywhere in this zone, anywhere. You can put it at the top. I already have an alert there, but I'm showing you in the middle or at the bottom. Anywhere in here. You could have it right there. You could have an alert set up for the remaining of the day, and you don't even have to be sitting at your computer, okay? Right click it, add the alert. It's in there. Now, if gold comes down here today, tomorrow, next week, next 2 weeks from now, I'm going to get an alert in there. And that's what I'm looking for. If you don't want the alert rate in the green zone, have it where they could grab the liquidity. What about right there? Have it where they could grab the liquidity. And then if it comes down there, you're getting alerted, then you watch what happens. Okay? That's a little hack in trading, is the alert system. Wait, it's like getting a text message. It's like getting a text from your friend who never texts you. Do you guys have that? Do you guys have a friend that never texts you, or a family member that they text you once out of the blue moon? That's what this alert is. It's going to be like my best friend from high school that never texts me, and once in a blue moon, they're going to text me. And then I know when they text me, it's an important text. Okay, so I better get it. And that's what that alert is. Okay, and do I just bank on this one? No, I can have multiple. I can have another alert here at this daily point of interest, right? You gotta set yourself up a little bit. What about higher low? What about in here? You see how we're holding right here? We could have an alert right in here. Okay, is it here yet? No, but what happens if it comes in here? What if it, like guys, look at how it's holding. What happens if it comes back down? Yes, it could bounce. We get an alert. But what about the same situation, the liquidity grab, right? They come down, they scoop the liquidity, and then close it back. We could look for a good buying right there, or a better buy deeper in the depth of market. Is this a good area to buy up here? No, it's not the best. This is where there's a lot of resistance right there. Right there, again, right there. If we're buying, we're hoping that it will break out. Here you're positioning yourself for a pullback buy, a discounted buy, right? If you use your Fibonacci, how many of you guys use a Fibonacci? Here's the low to the high right now. We can measure the retracements coming down. Grab your fancy Fibonacci tool. There's the lowest point, that purple line, the wick. Drag it all the way up to this high right there. And we know that the first discounted price should be 23.6. You see how I have 78.6? I have that plotted incorrectly. So I need to click on it and reverse the function. See over here, when you come to your settings, there's the reverse function. See, I click the reverse, okay. And then you see there, 23.6, first discounted pullback right there. There's the 38.2 lining up with this zone, right? There's the 0.5. If they grab the liquidity, they break that right there. 50% of this entire low here to the high, there's the 50%. So you see what I mean? If you use the Fibonacci, maybe you visually see this. There comes down, 50%, trend line, grab the, and then boom, we take the buy. Okay, but what about the 618, 786, and then the deeper discounted? Okay, so you know this is the better discounted area. Okay, that's how you can utilize a Fibonacci with your top-down analysis. Do you want me to leave the fib on, guys? So then we can see, yeah, I'll leave it on, okay? Do you guys see how I plotted the Fibonacci? We get a lot of questions about how to plot the fib, right? All I did was with this wave coming up, right here, from this wave, there, it pulled back, higher low, new higher high. We're holding right there, and now we're trying to break for a new higher high, right? But it's not there yet. It's struggling, okay? So if it comes down, right there's the 23.6, right there's the 38.2, right there's the 0.5, there's our 618, 786, and then there's the nice discounted deep buy in there. And then now you got a little double top on the fives. Came up, back down, coming up, maybe potentially back down. Look at the bodies. Okay, you see the bodies right there? There's where a body closed, body opened, a wick, body. See how we're still below here? So now it's could be pushing down now. We got lower highs, M pattern, Got to look for that black volume again, close below the yellow line. Maybe this hour we're going to push down. We're starting a new hourly candle right now. It's the first 5 minutes in. It's 12:05. And then again, if you're scalping or trading from this yellow line to the Fibonacci, the 23.6, it could just come down there. It could be a black candle, black, 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 and then stop right there. That's about 45 to 50 pips right there. Find support exactly there and then come right back up. If it closes below that, you see we're closing into 50% of that blue candle, then potentially it could use that as a retest location and then push down to the green zone. You can't see shit. My screen is too small. I apologize, guys. It's the new OBS theme, but I can zoom in. See, I often like to take this sell right here. I'm not taking it right now, but this is what I like, right? It came up to the red zone, came back down. You can see the double top now, and then it opened and short wick and popping. That's as a scalper. That's what I look for when I'm scalping. And sometimes you can get your 10, 20, 30 pips in and out within the same candle, okay? If I was to scalp that, I'm not looking to hold it till next Tuesday. It would be a scalp within the same candle, in and out, but you have to have fast execution speed. You have to have a broker that can complement that style of trading. You have to have low spreads. You have to have that, okay? If you don't have that, you're not going to engage in that style of trading. It's not going to work for you, because if you don't, think about it. If you take the sell, there's going to be slippage. You're not going to get filled right away. And then you have maybe a higher spread than I have. Maybe I'm trading with a half pip spread and you're trading with 3 pip spread. Do the math. You're 2.5 points behind me. And then when you're exiting, you have to have a fast broker to close the trade as well without slippage. So you have to understand that, right? A lot of people want to learn scalping, but they just don't have the proper broker to do it. Okay. You got to do your due diligence and find a proper broker that allows that style of trading. Because just because you understand the candlesticks, now you got to have the broker that allows you to trade that style. Okay, so now is the black candle doing his job, filling that wick and coming down? Where could it find some support? Maybe at the opening of that body, right? Closed body, open body. Just right above that Fibonacci, 23.6. So do you guys understand what's happening here? At the hourly resistance, there was a rejection, rejection, rejection. The market pushed down. It came back up. And look, it got rejected, lower, came back, big black candle came down. It came back up. There's your double top. It's your clear M pattern. If you cannot see an M pattern, go outside and smoke a joint. And then maybe you'll see the M pattern. Okay, right there. See the M. Capital M. Okay, M for money. And now, how far down is it going to go? It's got a wick, a wick, a wick. Is it going to just go down, that's it, and then come back up? And then just trade this sideways garbage action right here. Chevon, 4132 seems like support. 4132 right here, 23.6 potentially. Let's go smoke a joint to see the M. Yeah, if you guys can't see an M, not trading advice, go outside and smoke a joint. And then maybe you'll see a lot of M's every day. I'm going to Jamaica in a couple weeks, and they got some good weed out there. That Ron's going to be seeing a lot of M patterns out there. I'll be seeing M and W patterns. Hopefully the M's are not upside down. Smoke a J anyway. Yeah, whether there's patterns or not, smoke a J. If you need to relax, Smoke a joint if it's legal in your country. I can speak on this. It's legal in Canada. You guys are welcome to come to Canada and smoke as much weed as you guys want. Boom, you're welcome to come to Jamaica. Get away from the mother-in-law. Boom, it's an excuse to get away from the mother-in-law. I'm not in a trade right now. Nope. Okay, while gold's doing its thing, quick top down on US30, okay? This is it on the 5 minutes. Watch, I'm going to do a quick top down, quick, not, maybe 5 minutes top down analysis, okay? Do we have any zones that we can see in the past? Okay, what about this area right here? That was a previous all-time high break. I'm not getting those wicks, just to the bodies going across. See, red, now blue, okay? Are we coming back down to the zone yet? No. If it comes back down to 50,000, that could be a good buying opportunity. Look at this fake out, okay? There was a big black candle close, came back in, engulfed it, and we're taking up to the new all-time high. So there's Dow's new all-time high, orange line, Donald Trump's face up there, 52,275, 280. Now, where are we trading at? Let's figure out pivot points. Right there was a pivot. Came up. Look at closed, big black candle. Then we closed above. Then look at it's rejecting off of the yellow line, rejecting off of it. There was the body that closed above it. Okay, so now we're consolidating. Now we're trading in here. So do we have from the all-time high? Look at there's the bodies right there from the all-time high. Body close, body open. Tuesday, Wednesday. There was Thursday, there was Friday, the US holiday, and then here's how we're trading this week, okay? So look at yesterday, we came down, back up, and closed. Okay, let's follow. Look at how daily candle flipped on US30 today. It was really bearish today. There was the open, it was bearish. It was black. As soon as we came down there, look, almost a technical equal low with yesterday's low. Almost, okay? There's a purple line, almost equal low. Look, equal lows. Did the sellers do their job to take out yesterday's low? No. There's an equal low, tweezer bottoms coming back up. Look at, they saved it from breaking. Now they're flipping that big black candle, came to the opening position, and they flipped the candle to a bullish pin bar, okay? So have the buyers done their job today? Not yet. We still have not filled yesterday's wick to continue to break up to maybe this yellow line to 50,010. So we have a bullish pin bar on the daily. What a big flip, okay? And then you can see the pattern here. It came up right there, coming back down. Now we're coming back up. So look, is it going to be an M pattern tomorrow and then they drop it back down? Or is it going to close about and we're breaking for a new all-time high? It's going to continue to fill those wicks, okay? So let's go from the daily to the hourly. Where the hell did all this bullish volume come from? Let's figure out the times. Look at where it was selling off. Okay, this was Tokyo, 10 p.m., 11, there's midnight, 1 a.m., 2 a.m. There's London. London was the bottom. There's your equal lows on the hourly, 4 a.m. right there, kind of holding. Look at where they're holding support. So you see the bodies now? Here's your hourly support structure right there. There's your block right there. Wick, body, purple line, go across into the future. Now you can see how we came in there today at 4 a.m. This is where you're analyzing. I know everyone's going to say, Ron, this shit's easy when it's done. Yeah, but that's why. Stretch it into the future. And then don't be that guy that tells me I wasn't prepared for it, because if it comes back in there, there's the green zone and there's where it can go up. There's that liquidity grab that can happen and there's your A+ setup. How do we get it in there? Add an alert in there, okay? Is it there? No. Draw a white line right in it. I use white for hourly. There it is. Add an alert, and I'm preparing myself. Whether it comes in here today, tomorrow, next week, next year, I'm ready for it, okay? Now, look at the crazy volume at Wall Street, okay? So we 4 a.m., 5 a.m., 6 a.m., 7 a.m., 8 a.m. Here was Wall Street, originally bearish, black, right in there. Then it flipped. Remember, 9:45, we had flash manufacturing news. It came back up. We created a high, and then it got rejected and closed. That's a massive spin top candle on the hourly. Then we opened. Look at higher low, continue. Buyers did their job at 10 a.m., filling that big wick, creating a new high, closing at a daily point of interest. Then the next hour, they did not do their job when we started the call to fill that wick. It came back down, black, just above, the point of control. That is a structural candle because it closed above everything and at a daily point of interest. So first thing I do with that candle is opening balance, closing balance, point of control. Okay, 50%, mark it up, white line. And where's your point of control? It's the 618382 block right there. Did anybody do that for Dow Jones? Miss Jones today. Look at it, how it then, now you see. And guys, don't tell me that Ron doesn't teach you what a structural candle is. I teach you a structural candle all day, every day, okay? It's a big body candle that closes above all of this. Look, black candle, black candle, black, 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 black. All these little blue candles are not structural candles. That one is. It's a big abnormally volume-based candle, and it closed above the entire structure and at a daily point of interest. If you say Ron doesn't teach you this, you're sleeping, because I teach you this shit on a daily basis, okay? And I know what I teach here. So I know for facts what I teach. And if you don't know that, you got a lot to learn, okay? So what I can do is if it comes back in there, I can add an alert in there and wait in there again. Will it be a double bottom in there? Will that block still hold? Now we opened and look at it, it's breaking, filling the wick, and now we're approaching today's daily high when it right there. That was 9 p.m. daily high. There's the futures, 8 p.m., 9 p.m. Do we have a wick and a wick right at the daily high? There's our hourly red zone. Come up to those two wicks to the body. Look at what I'm doing, guys. Red zone, go across. You can see when it came in there, back down. Now, we might be coming in there this afternoon, right in there, and then it could literally go back down. If it closes above, you flip that zone red to green, and we're that close to the daily point of interest yellow line, and we're that close to a new all-time high, okay? Does that make sense? Now you can dissect that down to the 15-minute or 5-minute. This is where it is, okay? There was 935, bearish, right down exactly there, came back up, closed above, push out, pull back right into there. Look at the bodies. Remember, I always say, guys, understand where your bodies are. Body closed, body open. If you go backwards, you can see it was the resistance there, right there. Look at where it wicked off of. This is analysis. This is how you learn. This is how I learned how to do this shit. Look at, there was the 940 candle close, open. Look at when it came back 10 minutes later, right back down to the opening position, and then it took off. It pulled back in the green zone, holding, taking back off. Okay, so it's trying to reverse the overall trend, but you see the 5 minutes right there? Struggled right there, back down. Struggled right there, back down. Now we're coming all the way back up to this red zone right there, and then it could push back down, okay? You can see right there, Monday, 10 a.m., right out of Wall Street. There is 9 p.m. Monday night, and then we're coming right back into it right now, okay? Dow Jones is my favorite security. I love this over gold. I love this over NASDAQ. This is my shit here. I could trade this every single day for the rest of my life just on this 5-minute candles Dow Jones. Nothing else. I don't need anything else. All I need is me and Miss Jones, and I'm good. She provides for the family. Not as volatile as gold. Gold is crazy, okay? Gold's like that crazy ex-girlfriend you got. Ms. Jones, this is your wife. This is, you treat her good. This is your wife. Gold is that crazy ex that you keep going back to for this shit. Why do we keep going back to this shit? Why are we drawn to this shit? Like, we got to trade this like it's the end of the world when you got Dow that's so clean and smooth, and for scalpers, like, just look at one candle, like one candle in and out. Look at that bullish ignited candle doing its job, filling that wick for 50 pips and going for 50. Like, beautiful. Like, I love it. It's like poetry watching Dow. Yeah, and then we got this nice, like, this is our wife over here, and then we keep going to our crazy ex over here, and we keep looking at gold, and we get sucked in trading this shit over here. Why, guys? I think we need to see like a psychologist. If anyone's a psychologist on the call, please explain to us, why do we keep get drawn to this piece of shit security over here, gold, and we frustrate ourselves on a daily basis? Why? When there's so much cleaner trading securities out there. Can anyone explain it to me? Anyone? Anyone want to care to give me an answer? Why are we drawn to this security over here? Gold releases more hormones. It does. It does. Trev, you trade more indices than gold. I know, I see you. And it's I admire that of you. Yeah, we love volatility because we're crazy. We're like that's what we're attracted to. We're attracted to the volatility. We're attracted to the fast moves. We're attracted to the fast money of gold. But remember, all of that too, we can lose a lot. If you want to trade something more sustainable, something that's more, you can see the moves and they're not as crazy and there's not so much liquidity grabs, everything moves smoothly. Look at S&P 500, look at Nasdaq and Dow Jones, okay? You might do much better as a trader. Okay. I know a lot of retail traders that struggle and suffer with gold because look at it now. It's sold off and now it's right back in here. If I was just to box this range, this is all we're trading at. And this shit is frustrating a lot of traders. Why? Because they're over leveraged in here. And look at what it's doing. It's just going up, back down, going up, back down, going up, back down. The reason why, maybe I'll answer it. The reason why we're attracted to gold is because you can trade it on a 24-hour cycle. Like gold moves in Tokyo. Nasdaq and Dow Jones aren't the greatest to trade in Tokyo, correct? Correct me if I'm wrong. Gold trades well in London. Nasdaq and Dow Jones are not the greatest security. Why would you trade an American index in a European session? Correct me if I'm wrong. So gold trades, I can look at any day of the week on Tokyo, gold is moving. I can look any day of the week during London, gold is moving. I can look any day of the week, early New York sessions, COMEX and Wall Street, gold is moving. US30 and Nasdaq move with the US markets. So if I was trading Tokyo and London, I'm not probably trading US30 or Nasdaq or S&P 500. Gold, 24 hours of the day, moves, right? And that's why it's more attracted from everyone around the world. Why not silver? Silver is nasty. Oh, silver is the worst. Silver is the worst metal to trade. That thing is a piece of shit. Stay away from silver. It's good for swing trading, not for intraday trading or scalping. Silver is more volatile than gold, and it's got high spreads. Some of you guys don't have good spreads on it. Yeah, high spreads, Trev, you're right. Oh, Emmanuel, you're right, because it's gold. Metals are valuable. You're waiting for the diamond index. That would be nice. Thank you, Melanie. Yes, if you guys can hit the like button and subscribe to the channel. Thank you, Melanie, for that. I appreciate you. Yeah, guys, thank you. If you can hit the like, if you're learning today and you're having fun, hit the like and subscribe to the channel, okay? Gold, unfortunately, is not moving anywhere right now. It's in this consolidated phase, okay? US30 is still right at the trading at the highest point of day and at this daily point of interest. We can continue to wait it out, okay? And a little tip for someone, maybe this will relate to someone on this call. If you're struggling trading gold and you're not yielding good results, just maybe make a switch to a different security. It might change the game for you. Believe me. If you're struggling with gold and you're losing and then you keep trading it, just one day or 1 week, try and trade US30. The same principles you use with gold, top-down analysis, the same candles, same shit, point of controls, alerts. Try it with Dow for 1 week. Just test yourself. What is 1 week? And you might fall in love with it. I know here at SST, a lot of traders that transition from gold and trade NASDAQ, S&P 500, or Dow Jones, they completely changed the way how they're trading, and now they're actually on the winning side of trading, okay? I'm just telling you facts from what happens here at SST in the Discord. And I hear a lot of feedback from a lot of the guys. They're like, Ron, I was struggling with gold. I made a simple switch to the different security to trade index. And let me tell you guys, there's no commissions as well. So you want a bonus, you want a something. When I trade gold, look, okay, let me talk facts with you guys. When I trade gold, I've been known to trade standard lots or larger, okay? A standard lot for me, and I have a good broker, is $4.50 round trip, meaning 225 to buy and 225 to sell. When I open or close, whether I make a make a winning trade or I lose money, I got to pay the broker their fees, their commissions. So think about that. Let's round it up to $5, and that's good for my broker. Some of you guys are $7.50, some of you guys are $10, some of you guys I even saw $13 commission for a standard lot. Okay, I know some of you guys don't trade with standard lots. You just divide that by your sizing. If I was to do a 0.1 with my broker, I'm not paying $4.50 for a commission. I'm paying 45 cents. Okay, still adds up, right? But when I'm trading this security over here, US30, you know how much my commissions are with my broker? Zero, nada, nothing. All I have is a standard spread, okay? I know when I'm trading US30, it's 1.2. When I'm looking to make 50, 60, 70, 80, 100 pips, I'm willing to give away 1 pip. It's nothing. That's my spread. NASDAQ is less than 1 pip. It's 0.8. And my commissions are 0. So if I take 10 trades, whether I make money or lose money, I'm not paying the broker anything. So think about you saving money as an expense as a trader. If you take 10 trades, like if I take 10 trades with a standard lot, 10 times 5, I'm paying the broker $50 a day. At 5 days a week, that's $250. At the end of the month, that's $1,000 out of my pocket I'm giving the broker, where I could have taken trades with US30 and saved that $1,000. You could go buy your kids gifts. You could go take your wife out to a fancy restaurant. Why pay the broker commissions? Does that make sense? Or maybe it just makes sense to me. When I figured this out, that's why I fell in love with US30. It trades better. I'm not paying the broker commissions. I'm more consistent with US30. You can follow how it runs. You can look at the index of US30. You can come to our website right over here, guys, real quick. Come to our website, go to education, scroll all the way to the bottom. You got NASDAQ composite, and you got the US30 right over here, Dow Jones. You want to read a little bit about what the Dow Jones is, it will tell you. And then how they're ranked. Goldman Sachs is ranked number 1, Caterpillar number 2. So if Goldman Sachs, I could follow it on a split screen. If they're up 2, 3, 4, 5% on the day, I'm pretty sure that Dow Jones is going to be bullish, and I could be looking to buy pullbacks. The top 2 of these, Goldman and Caterpillar, make up 20, 25% of the entire US30 index. I could watch these 2 securities, right? Then you add in Microsoft, American Express, the Home Depot. You know what securities are trading in that specific index. So that's why we watch earnings as well, right? Just like some of you guys trade gold alongside with the DXY chart. Hit the likes on YouTube if you understand what I'm saying, okay? Gold, you pay commissions, right? Whether you make money or not, okay? If you make $100 in profit, you have to subtract your commissions, and that's your expenses for trading this. When you trade US30, NASDAQ, or S&P 500, no commissions. Which one would make more logical sense? I would go with the one with no commissions and less whipsaw, less erratic, right? That's with experience, because I used to trade gold all my life. And I didn't even know too much about, when I first started trading, I didn't know too much about Dow Jones. I didn't know too much about NASDAQ. I didn't know too much about S&P 500. All I knew was gold and oil when I first started trading. So think about it. I was over leveraged trading gold, paying the broker all these commissions, crazy commissions, and losing. And I was losing more money faster. And then one person just told me, Ron, what that, same things, had the same conversation. What the hell are you doing? Why are you not trading index? I said, what the hell is an index? And then they explained it to me. And I'm like, okay, that makes sense. And 99% of us are attracted to trading this shit. Okay, so you see, we're still, we got lower highs, okay? If I'm just trying to make some sense out of what's going on here, we are trending down, it's sloping down, right? You can see lower highs, lower high, lower high, lower high. So we're in a descending triangle trying to break this supporting level right here, okay? This 4134. It looks like it's leaning towards the downside, but it's not breaking as of yet. We have a new 30-minute candle that just opened at 12:30, okay? And it is technically pushing up and up. So we're stuck in here, right? And it could definitely break out bullish, or they could send it right back down, okay? And your guess is as good as mine in here. Like, this is basically like flipping a coin. I could literally flip a coin bullish or bearish where it could go. This is not high probable area to be trading. And this is where we're going to get mixed reactions. If I give a poll, I guarantee you it's going to lean 50-50 or 60-40, whether you guys are buying or selling. We don't have conviction here. I guarantee if we did a poll here, we're not going to have like a 90% bullish, 10% bearish, or an 80-20. It's going to be split. So and the market is showing that. Buyers, sellers, buyers, sellers, buyers, sellers, buyers, right? Someone's going to get squeezed out of their position. When? Maybe in the next 30 minutes, maybe in the next hour. Gold's not going to stay in here the remaining of the day, right? You guys know it could make an attempt to come right through here, grab the liquidity, right? Or break down and come down in here. I rather trade off of here or trade down in here. Do I consider using volume profile? Yeah, you can add volume profile. Absolutely. You can use the traditional volume profile on TradingView. You can use a additional depth of market like Quant Tower, Bookmap if you want that level 2, level 3 analysis, and you can see more of the pending orders where they're sitting, like these type of blocks in the market. If you're using a Bookmap, I guarantee you should see a block at around 4,120 up to 125. There should be a block, a green. You'll maybe see like a heat map of orders waiting, pending in there. You might see something right above here now. What I like about depth of market is you could see pending orders getting canceled. Like you can maybe see a big heat map, and now as the bullish volume is getting in, you might see that block disappearing. Why? What's happening behind the scenes is the offers are being canceled because they can see the buyers are coming right through, and then they will reposition themselves with maybe offers above at a discounted level, like right over here. So you might see that, like as this body is coming up, you might see orders getting canceled. Because remember, they're pending orders and they can be canceled. Just like you can have a buy limit, sell limit, and you can cancel it at any time. That's what happens in the market too. These orders could get canceled and then they're repositioning themselves higher. Like maybe they don't want to sell right here because they see a big bullish candle, bullish volume coming through here. Maybe they want to cancel that and then reposition themselves to sell at a higher discounted level to send it back down, okay? You can't see that with TradingView. You can only see that with like a layer of depth of market. We're on the 5-minute time frame. 5 minutes right now. So buyers are making a move coming through here, but they've struggled here, 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 and here. So are they going to continue to do their job and fill these wicks and create a new high? Are we going to close above here? Is it going to be a fake out? This is now what we got to watch for up here. But we're still technically inside this zone. Okay, so this candle's closing now. There was an initial rejection there again. So it's closing, but that's a big bullish candle. It's the first bullish candle to close above this zone in our entire session, right? We haven't had a candle. We had impulse, impulse, impulse. So that was the first bullish bar starting at 12:30 that closed above, okay? So if it pulls back, maybe this area, that the red line that was resistance, 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 could be ongoing support at 4,138 to pick up pullback buyers, okay? But right now it opened, shallow pullback, and it's bullish, trying to continue to do its job to fill the previous wick and try and fill up to this hourly resistance. So we'll see if it gets pulled back down into here, or if it's going to continue to break out. The hourly candle has 25 minutes and it's a bullish pin bar now. It's still building to break out of here. And US30 still building at the highest point of the day. News-wise, guys, let's see any news over here. Iran president discussed recent progress bilateral relations. Coming from Islamabad, Pakistan, Iranian president holds productive discussions with Pakistani officials. U.S. Secretary of State, this was at just after noon. We're going to deal directly with Lebanese government. Iran MOU, Memorandum of Understanding, will come up in talks with the Middle East region. You can't end hostilities in region if Iranian proxies are launching missiles. It's an issue that will be brought up at appropriate time. Rubio is saying Hormuz International Waterway must remain toll-free. And the Pakistani Prime Minister will be visiting Tehran next week. Okay. Do you guys want me to leave news on like this or full chart? I can go back to the news. I can go full chart and news. Okay, and gold is technically bullish, but this was the zone. This was the high that broke. This was Tuesday right at midnight. You can see it right there, the time and date. Tuesday, June 23 at midnight. It broke out right up to there, 4,147. So you see that red line I'm placing right at that wick, because this is what we want to see. Are we just going to break it here and then they reject it back down and that's still going to be technical lower high? Or are we going to break this red line and create a new higher high? And that could change the entire depth of market, and that could change gold being bullish this afternoon, right? And then maybe we look to buy pullbacks. But we're still having difficulty in this red zone right now. So it came back in there again and they've rejected it. So we'll see how this bar will close. Bradley, we go live every single day. If you come to our website, you can see our live trading schedule right over here. Dave does private New Yorks Monday, Tuesday, Wednesday with the Zoom. And then we're going to do for the entire summer, June, July, and August, and a little bit of September, these same hours. So these will be our hours. So everyone can get used to these. Mondays will start early, 6:30 to 10 to go over weekend news, do our analysis. And then we follow Dave Tuesday, Wednesday, Thursday from 11 till 1:30, depending on price action. We can stay longer. We can stay up till 2 p.m. if there's good volume. And Friday as well, we do a post New York. So that's our trading schedule. With myself, we're on YouTube and Zoom. And with Dave, he just does private Zoom. Okay. And all you got to do to join the free YouTubes is just subscribe to the channel, hit the notification bell, and like the stream so that Ron can continue to be here. Because if not, I'm going to retire and I'm moving to Southern Albania or to Jamaica. And then my streaming will be done. I'll be sipping on margaritas on the beach. I've had enough of gold. But I'm not going to do that. I'm not leaving. Just like Wolf of Wall Street. I'm not fucking going anywhere. I'm here to stay with you guys. We're going to battle in the trenches every single day. Everyone's homework assignment tonight is to watch Wolf of Wall Street. And then when you come to the markets tomorrow, you guys are going to be pumped. Okay. I can't believe there's still some people that have never watched Wolf of Wall Street. It boggles my mind. It's one of the greatest films ever created regarding the stock markets. Is there anyone here that's never seen Wolf of Wall Street? Because if you haven't, after this call, you're going to have a homework assignment. And you're going to watch it. It's with Leonardo DiCaprio. I'll watch it 3 times. I watched it 3 times last night, Trev. Okay, so we got a wick, rejected in our zone, and a black candle, okay? So you can see the buyers are struggling up here just like they did over here. We may need to maybe engage in a sell. If it engulfs and comes back and we get rejected out of this red zone, we might be taking it back into here. But right now, as it comes down, it's got a higher low pushing back up. So that I remain hesitant. Emmanuel, for you, it's margin call. Margin call is a good one too. There's a lot of good stock movies. Boiler Room, that's all about like penny stocks. That's a good one. Boiler Room, margin call. Wolf of Wall Street. What else are we missing in there? The Big Short. Have you guys watched The Big Short? There's one called Wall Street. It's an old like 90s film. It's called Wall Street. Yeah, it's developing. Yeah, you're right. Trade Geek, I like the name. Golden crossover. So the 9 has crossed over the 200. It's a little behind. That's showing that bullish volume coming back up. So yes, potential for a bullish crossover breakout and to break this hourly resistance right up here. So you can see a nice pullback buy would be maybe at this yellow line where the 200 EMA, if it comes back down black right there, that could be a good potential discounted buy at where this candle opened at 1230, like right there at 4,136 to take it back up. But it might break out right now without even pulling back. That's the hardest part of trading is, do I take a buy right now? Again, then it's going against the rules. You're buying on impulse before a candle closes, and then we're not waiting for the pullback, right? And a lot of things, when we do that, then it goes through for 10, 20, 30 pips, and it gets rejected and then comes back down. And then we're scratching our heads saying, well, why didn't we wait for the pullback when we get stopped out? So It's one of those situations, guys. You're going to have to make the executive decision. When you're trading, you are your own CEO. You are your own boss. No one can tell you what to do. You got to tell yourself what to do every single day. And now it came up, and then again, another black candle coming right back down. Trev, you're looking at Netflix. It's been dropping a lot. I know it's on discount, but you know, the thing is, Trev, it could drop down further. So like if you're going to scale in a small position at a time, dollar cost average in, like that's what I do with anything. Nvidia is a good buy. SpaceX might be a good buy. Anything is a good buy now, but it could drop down further. So if I bought like, let's say 10 shares of Netflix right now, I would have some money aside. If it drops another 2, 3, 4% next week, then I'm not gonna panic. I'm gonna dollar cost average in, and then when Netflix recovers, I'm back in the money. I don't think Netflix is gonna go bankrupt. So yeah, that's what trading by the dip, and it keeps dipping, but position sizing, and you're doing it with big companies. Okay, you're not doing it with like Forex trading gold with a broker. I wouldn't be doing that. I don't recommend that. But yeah, if you want to add some shares of Nvidia, add a little bit. But if it drops a little further, you can add a little bit. Don't panic. Okay. That's more of an investment. You're looking to invest. So you're going to have to hold it. You're not scalping. You're not intraday trading. You're holding it. These are the big names. And then you could eventually do covered call options. If you can accumulate 100 shares of that company, the covered call options is like your insurance, where the banks will pay you passive income just for holding those shares and putting them up for sale. Look at the big black candle, the elevator we have coming down now, right at that hourly white line and in the red box. Okay, so that's what I was saying. We don't want to FOMO buy the highs because this is the shit that will happen. And that's what I was saying. It would be nice to wait for a pullback here or here. That's a big drop right now. Okay, to all these buyers that bought the high, that's dropping now 50 pips, okay? And could potentially go down even further and extend on the next bar. So I'm going to wait for this candle to close. It's already engulfed that, engulfed this. Will it close back? It's retesting the retest position. We could maybe buy it back up. But look at the hourly candle now. It's getting a lot of indecision now, going 10, 12 minutes into the close. Today we have news? No, not that I'm aware of. Why is the channel name Stock Sniper? Good question. Because I was always trading stocks all of my life. Penny stocks, stock market. I was trading Forex a little bit by myself as well. And when Dave and I got together during COVID, we thought it's easier to teach Forex for the entire world than stock market. So that's why we're called Stock Sniper Trading. Oh, Trump speaks at 105? I didn't see that scheduled. Oh, 205, 205. Trump. Oh, they just added this in there. It wasn't there when we were looking. Due to speak at Mack Trucks Valley Operations Facility in Pennsylvania. Oh God. Who knows? He's probably going to go off script there. 205. Okay. So if you're trading at 205, that's a new 4-hour candle, mind you, at 2 p.m. And then you got President Donald Duck talking at 205. Trade careful at that time. Okay, so does this surprise anybody that there's some sellers here offering at the hourly resistance where it struggled there, it struggled there, and it struggled there. It came right in there, and now it's coming back down. Let's see where it will close now. So it looks like it's closing below the red zone. So it could come back up blue, 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 and test 50% of that black candle right there. But it could continue to push down, fill that wick, and drop even further. So if you're looking to buy gold, I would wait maybe somewhere near this yellow line, the pullback that started this big bullish rally right here at the open of this 1230 candle, or the retest right here. We should see a potential wick being created here because there was resistance there, this red line. There was the first blue candle that closed above. So we should see some minor support right here. There's the wick. Now will it flip the candle blue to come back in? Okay, this is, excuse me, this is again where we could be making that pattern that we recognize. Came up, maybe a neckline here or here. Let's say it's here. Maybe we'll come back in. Will it be a double top here? And then continue to drop down and then come all the way down here. Or it's building. And then you guys looking for buys, it comes down here, builds, and as it's coming up here, it's not a double top. It breaks out. It continues to fill that wick, break out, maybe break that, close, retest this. That would be a red to a green zone, and then gold is continuing to fly up to 41.50 this afternoon. And then Trump, when he speaks, will change up the game. And then as soon as he opens his mouth, then you're going to see volatility. Look at our hourly candle. Now it's turned into a spin top. It might lose its bullish volume going into the next hour in the next 8-9 minutes. Okay. So you see how the hourly candle is showing indecision. And let's see US30. Okay. So we're trading now at the highest point of the day again. Okay. So we're revisiting it when we were over here and here too. So will US30 cool off now, or is it going to continue to break out of here? Has this bearish candle changed your bias for buying or selling, or no? It doesn't change anything. For the buyers, are you guys still have a buying mindset? To the sellers that were selling, does this strengthen your selling position, or still to the traders that are on the sidelines, are you still on the sidelines? Does this change anything, this candle right here at 1245? Or nothing yet? Still in a range. It's not really doing anything crazy. Chandin, bro, today you are down $40 loss. Please give me a trade in gold. I'm not a miracle worker here. I would love to, but that's beyond my capabilities. I wish I could help you. Tony Gold, now you see why waiting is important before unwisely taking a position. Yes. And imagine what I go through on a daily basis here, Tony Gold. When I try not to look at the comments, I want to look at the comments, but everyone's like, buy, sell, buy, sell, buy, sell. And then I can lose focus and or force trades just to keep everyone happy. And I don't want to do that. I don't want to do that. Those days are over for me. You know, I don't want to do that. As much as I want to get into a trade to make it entertaining for everyone, break it down in a live trade, I'm going to wait. I'm going to wait. I know it sucks. If you guys want to unfollow, that's fine. At least I can sleep better at night. I see other trading channels. Some guys go for 5 hours. They don't even take a trade. All they do is talk. That's fine. And do giveaways and shit like that. That's fine. We actually go hard in these sessions. We actually trade. We go, believe it or not. But there's situations that call for waiting. And if you don't understand that, then it's hard for me to explain it to you. Then you'll learn it. Eventually you'll learn. You'll learn why patience is the name of the game. After you take losses, you're gonna wonder why did that guy on that YouTube channel wait? Why did he say to wait for a better setup? You'll understand. And then once you start banging out a couple of these successful trades in these higher time frame zones, you're gonna start to understand why waiting is the name of the game. I'll wait all day. I'll wait 24 hours if I have to get paid. Like the market's going nowhere. The market is here 24 hours a day. It's here in Europe. It's here in North America. It's here in Australia. It's here all over the world. It's here. Don't need to force shit. Okay. If you feel like you're forcing a trade, hold off from taking that trade and ask yourself, why are you forcing a trade? It should come natural. The trade, whether you're buying or selling, should feel natural. It shouldn't feel like you're forcing it. Now, see, it's coming down. Let's see right over here. So this bar at 1230 started this big bullish move. Now it's retracing potentially all the way back down to the opening. And it's not just an opening. We have a daily yellow line. That's a point of interest. The 200 EMA is there. So there's more indicators here showing that there could be a potential bounce here of buyers. I'll draw like a little green zone to illustrate that. And we're going into 1 p.m. So time and sales. Now at 1 p.m., we're going to get an hourly candle that comes in the market. Look at this now. This might be liquidity, and then it comes back up, okay? So look at where we're trading. We're trading right back in this same shit zone. But they broke it out to the hourly. There's the true double top. Now you're seeing the big double top, not this little shit in here. The bigger picture. There's the big top. All of this is the big bottom. There's the second M. Remember, smoke a joint, go outside, smoke a joint, and you'll see the big M. Now the big M is doing its job, filling that wick and driving down to the 236 Fibonacci where we plotted it. It could close down here, come back up, and come all the way right there. That is your good buying opportunity right there. And then bring it back up. Unless it closes below and we're continuing to sell. But you see where I'm targeting to trade off of? Maybe down here. Maybe potentially I missed out on a sell up there. Yeah, looking at it now. But guys, look at the bigger picture. You see all this bullshit inside here? It was just to break it out to the second top up there. And there's the bigger drop. Why? Because that's higher time frame, guys. Mo, you literally said you can short this? Good, good, good. You don't need to say it. You need to do it, okay? We believe you. We believe you. But if you did take the sell, was it that what you were looking for? Like this setup? And if you did, congratulations, bro. That's amazing. I'm proud of you. You had the right mindset. See? Selling in a red block as opposed to buying FOMO. There is some FOMO buyers on the call, and they're saying, "Oh, my account is blown because I bought up there over leveraged." Well, logic, I'm going to be honest with you. I'm going to say, why the hell were you buying a FOMO breakout? When you look back at this red block and you can see it came up there, got rejected down. It came into there, rejected down. It came in. I don't see a blue candle closing above. They've rejected it down. That's why it's a big red block. And there's going to be traders that say, Ron, I blew up my account. Well, now learn. Now you got to learn. Ask yourself, why were you buying up there? And now you could get a discounted buy coming down here right at, look at the wick, right at the 23.6 Fibonacci, okay? And now we're going into 1 p.m. in the next 40 seconds. A lot of you guys called to sell. Good for you guys. That's amazing. Good analysis, okay? But let's continue analyzing. Like the trade's not over. Did you pip and dip out there? It could reverse right back up and come and break that and go up. Okay, so does this surprise anyone that the wick is at the 23.6? Remember, we plotted the Fibonacci from the swing low of the day right there at 4 a.m., 4:05, all the way up to that previous swing high. So that's been the retracement. Now here we go into 1 p.m. We're below this block. Now, remember you guys said a nice golden crossover? Look at now, the 9 is creeping back down to the 200. This could be a bearish crossover, and they faked out the market right there, and it could be dropping down further. So now it just opened and could come down black, fill that wick, and drop, or it could come back up blue. Best thing to do is wait for it to come back up blue and sell either a retest if it comes in there at the yellow line. Otherwise, you're in this candle, maybe continuing to sell, but you know it could get a wick and come back up for a retest. Now they're really displacing the market down. Will it come all the way? This is a nice potential buying zone down in here. I'm waiting with an alert. But if I want to sell, maybe I got to wait for it to come back into here and then sell it back down. If that can't hold that red block, then what about where the body of this candle at 12:55 opened? That would be a better premium area to sell. But we still got to respect this area because that's where our 9 and our 200 and our daily point of interest are. Okay, now got a wick. Will the body turn blue? Came down, created a new low, now flipping. Will the candle turn blue, blue, blue and come in here? Or is it still holding that black opening head to continue to push down? I like that quote. Before Zai, FOMO is like Einstein said. The definition of insanity is doing the same thing over and over again and expecting different results. That's awesome. I like that quote. It sums up FOMO trading to a T. Let's US30. US30 is selling from the all-time from the daily high. Okay, so it came up there 1 p.m. Momentum changes. It could definitely come back up there. Maybe look for a second top, then sell. Let's just watch this gold for a moment. I got about 5-10 more minutes, and then I gotta take off. Going with some buddies to watch the Portugal-Uzbekistan game. Sorry, your name is Bazi. My bad. It's just old. It's okay. It's a nice name. Anyone see Messi score 2 goals yesterday after he missed the penalty shot? Yeah, the game has started. I know. I'll get there in a bit. We're going to go to a Portuguese club downtown, and they got piri-piri chicken. I'm going for the piri-piri chicken. I'm not going for the football game. I'm going for the chicken. They got good roasted chicken with the piri-piri sauce. It's made Portuguese style. Oh, Ronaldo just missed it. Oh my God. Did you guys see that? Ronaldo just missed the cross. Wow. Oh, you had it. Oh, shit. Just missed it. Amazing, amazing. Ahmad Hussein, You've been watching us for 3 weeks. We taught you best thing, patience. So thank you. I've been doing so well. Amazing, amazing. That right there, Ahmad Hussein made my day. Okay, patience pays off. Okay, guys. I'm gonna go right now because my buddies are waiting to watch the Portuguese game, and I want some piri piri chicken. Guys, I appreciate you guys today. If you're gonna continue to trade, maybe look to maybe continue to sell off of this. This could be a potential buying zone if it holds up. That's gold, and US30 could come back up to the daily high and get rejected. But watch these levels, like yellow line, place an alert there and watch the volume, okay? Tomorrow, guys, don't forget, we'll be back 11 a.m. Eastern. I go pick up my son because he's got his last exam. So around 11, maybe 11:15, I might be 10, 15 minutes late. But around 11, we'll get started. And we'll get back into it. Okay. Sorry, I didn't find a suitable trade setup today on gold. You know, it's starting to open up right now, but the majority of the call we were dealing with this volume. I'm happy that we didn't take a trade in there. Just remember 2 p.m. Just after 2, Donald Trump will be speaking. Whether he speaks about the markets or not, whenever he speaks, could become volatile. Just be careful. Again, I'm gonna remind everyone, if you did good today, if you hit some goals or you made some pips, maybe walk out of the markets, go enjoy the football games, and come back stronger tomorrow. If you had a bad day trading today, if you're in drawdown, don't compound the problem. Maybe step away from the markets, review why you lost, learn from it, and save some pips for tomorrow so you can recover. Don't go trading on revenge. Don't go trading because you're frustrated. Don't go trading because you're mad, okay? The markets love that. The markets will eat you up. The more you trade when you're upset, and Portugal just scored. Who scored it? Oh. Well, Portugal should handle Uzbekistan rather easily here. Was it Ronaldo that scored? See, have the mentality as Ronaldo. He's had a tough tournament, and now he came back patiently, relaxed. He just missed a beautiful cross, kept his composure, and came back and scored. Ronaldo is the greatest football player of all time. Better than Messi. I'm going to start a war here now. Let's see the goal. Oh, beautiful. Beautiful. Ronaldo. Wow. Wow. 41 years old. Look at him. The GOAT. The GOAT has spoken right there. Okay, guys, I'm going to go watch a game and eat some piri piri chicken. I love you guys. Thank you, guys. Please subscribe to the channel. Subscribe if you listen to this. Like the channel if you like Messi. Like the channel if you like Ronaldo. Like the channel if you like World Cup. Okay? And subscribe to the channel if you like everything. Okay, guys? Have a great day. I appreciate you guys. And we'll see you guys tomorrow. Okay? Have a great evening. And enjoy the football games. We'll see you guys tomorrow. Okay? Have a good day, guys. Thank you, guys. Tulume, have a good day, guys. Christoph, thank you, guys. Enjoy your day. Enjoy your day, guys. Sorry, tough volume to trade this session, but we'll see. Maybe tomorrow will be much better volume. Have a good day, guys.